Godwash Records.
Let not your heart be troubled. You believe in God and in me too. Yes, in my father's house are many, many mansions there. Oh, so I'll be leaving to make a place, better place for you. Yeah, when I'm done, I'll be right back to take you home. Peace, joy, everlasting joy. I'll be taking you home to peace, the joy, everlasting joy. I'll be taking you home. Yeah. Know that you'd face tribulations, but be of good cheer, I have overcome the world. Yes, and I'm saying this to you so that you might have peace. Just hold on to your faith, never lose heart. Cause it won't be long before I come back to take you home to peace, to joy, everlasting joy. I'll be taking you home.
Hello, everyone. I'm hoping that we're live wherever you're joining us from. This is the Lagos Angel Network's Launch and Learn for the month of January. My name is Solomon, and I'm your host for the event. And I'm glad to really usher you into the year 2026 from this side of the angel investors community. The Lagos Angel Network is an exclusive community of angel investors that is committed to providing angel investing education, policy advocacy, and funding for the startup ecosystem and extended SME business community across Nigeria. Even though we do have the christening Lagos, we are truly a pan Nigerian angel investing community that is focused on ensuring that entrepreneurial activities across the nation is improved. And on this program today, we will be considering the risk, the realities, the returns that are possible in angel investing today. But before we go on, we may want to explore what really the returns looks like around angel investing in the current startup climate. We would consider risk mitigation strategies and hoping that angels and the general populace understand the realistic expectations that they should have when it comes to exits, governance, founder relationships, and how to build a resilient and a rewarding portfolio. So, our job at the Lagos Angel Network really is to ensure that more and more people understand what angel investing is about, they learn about it, they understand that it is part of their overall, well, not understand, but try to make them add it to their overall investment portfolio by being better investors, equipped, educated around that. And with that also, we also want these angel investors to provide funding to the several millions of startups that are emanating out of the African landscape every day. Now, if there is the angel investor and there's the founder, money is flowing through, there has to be a stratosphere, an economic arrangement that allows them do business and provide value together properly. And so policy advocacy is one of the things that we focus on, engaging with government and other private sector entities to ensure that the overall angel investing landscape and business landscape by extension is conducive for all the players. And so this program today would capture these thoughts and many more. I am not your speaker. I have no business here right after now. And graciously, we do have our guest in the house and our moderator, who I'll be introducing shortly. Um, our moderator is the very delectable Amanda Etuk, who is a dynamic ecosystem builder and leadership coach. She leads the program activities as program director at Cascado. She supports high growth African entrepreneurs through mentorship, strategic development, and her experience spans venture support, founder psychology, and investor founder alignment, making her the ideal moderator for this nuanced session. So, ladies and gentlemen, if you are very happy with us, and I know that we're live on YouTube, so you can just interact with us there. I can see that we have about 27 people already watching from the studio here. We can see that much, but I know that there'll be a lot more joining us already. So, Joseph, please bring Amanda up. And yay! See Amanda. Yay. Thank you very much, Amanda.
Thank you,
Um,
everyone.
quickly before we bring up our guests, what did you think about this? Um, the topic, angel investing 2026. So I know I've told you Happy New Year unofficially, but hey, it's still January, so I can still say Happy New Year. But talk to me.
Happy New Year again, officially. I'm really interested in the conversation because I think a lot has shifted from when angel investing was a thing. Now there's more a strategic approach to portfolio construction. Angels are more like capital allocators now rather than just supporters. I'm really interested in hearing what Mr. Suleiman has to say. He's one of the most prominent angels in our ecosystem. So this is going to be a very interesting conversation.
Awesome. Great. So, without much ado, I'd like to read a brief citation of our guest, Mr. Adedotun Sulaiman. He is a distinguished figure, rightly so, in the Nigerian business and investment landscape. He's known for his strategic leadership, deep financial acumen, and growing influence as a super angel investor. Yeah, I really do think that after um, over almost a billion in the Nigerian startup space, this man certainly deserves the title of super angel. So with us, we do have one person who we describe as a super angel. His portfolio, although selective, reflects a commitment to high impact ventures with strong fundamentals and scalable potentials. Reading about him and studying about him, I found out that since 19 Bugboro, like my people will say, since 1975, man has gotten himself a first class degree from the University of Lagos in business administration. Um, he's been a consultant since 1979. I know that a lot of people on this call Their fathers have not met their mothers when DS was already consulting and engaging, and he's been there till now. I can authoritatively say that even up till end last year, man was still writing checks as an angel. There's no need to push this conversation any further without him. So, ladies and gentlemen, please let's receive Elenio. Yes, sir. Welcome, sir.
Thank you very much. Thank you. Well, this is a new one for me, but I hope it will go well.
It will go well. It will go well. So, Amanda, I leave you in the hands. Okay, no, I leave DS in the hands of Amanda whilst
Exactly.
decide to you
So
guys enjoy.
I'm in Amanda's hands rather than the
In
other
a
way
very
around.
safe space, in a
Yeah.
very in a very safe space.
And you
So
say I should be JJ as we say in Yoruba.
I'm still
those
I'm
those
still
who
talking
understand know what I
Yoruba.
mean. Anyway, be easy on me, or be gentle
No,
with me.
no, this is a lived experience for you, so
Sure.
I don't expect us to have any hitches. So
Right.
just
No
to set
problem.
the stage, Nigeria has gone through several cycles when it comes to angel investing, from optimism to correction, learning, and then now we are where we are. So, from your vantage point, what would you say has changed from 2021 to today, 2026, beyond the headlines?
Well, I think you used the word I was going to use, and that is optimism. There's more optimism in the air. There's more hope, higher expectations, and that's because the country has addressed, at least over the last 2 or 3 years, some of the fundamental distortions we had in our economy, uh, particularly with respect to the exchange rate. So we have more stability now, more availability. Money can go in and out more easily, and that gives a certain bit of confidence that since it's beginning to happen in Nigeria. I mean, of course, beyond the AJ level, of course, are the bigger businesses where, in terms of inflow of capital, or multinationals re-engaging with the Nigerian economy, we are beginning to see more of that. Last week, I think it was Mobil that announced. So it was Mobil on Shell announced, an investment of $20 billion to the Nigerian oil sector. This is the same share that less than 2 or 3 years ago sold their onshore assets in Nigeria. So coming back to invest 20 billion in the economy says something about confidence, about the fact that we've gotten a lot of the disruption out of the way. Nigeria is kind of ready for big business. And if it is happening at that level, I think the same thing will happen at the lower level where NGOs operate. So more than anything else, I would say more optimism in the air. The issues that we have remain unsolved. The issues that create the opportunities for angel investing and innovation and so on are still there. So when you marry that to an environment that is more supportive, more predictable, uh, and so on, where these institutions are getting better strengthened and so on, you have a better operating environment and therefore a better environment to do business. So more than anything, I would say Nigeria is more ready for business now than it's been in the last 2 to 3 years when we're going through the reforms. So,
Yeah, it's interesting that you've aligned optimism with today's reality because
yep.
for a lot of founders and maybe people in the ecosystem, they are looking back to 2021 to 2023 as the good old days. So I find it very interesting that you've come back to say, optimism for what is possible now for our current reality. So that's very interesting for me.
Well, again, the way we look at it will be different because I imagine my audience is mostly the investors, not the founders. Am I correct?
Yes.
Okay. Now, from an investor point of view, definitely the last 2 or 3 years has been, I won't call them golden years. I won't call them good old days. It's been tough. It's been tough to get anything done in Nigeria. And the lower you are on the food chain, the tougher it is. It's been tough for established businesses. It's even it has been much, much tougher for startups and so on. So, and therefore, for people who put money in any business in the last 2 or 3 years, they would have found it tougher going than I would have said the last maybe you could go back 8 years or 10 years. So I don't think the environment has been particularly kind to business generally, to small business in particular. And of course, I think anything that is in the startup phase will definitely have faced tougher times, I would say, in the last 2, 3 years. Now, what's happened, what's changed fundamentally is that the environment is now more receptive. I mean, you are more certain of the rules, games, and so on. And if you're an FX based business or whatever, there's more stability. Let's just say there's more stability generally. So and the mood is more positive.
So I'd
So I
like
would
to
say for me, it's a time to re-engage. If the last 2 years have been times when you've been kind of take some kind of caution, I think it's time to re-engage.
So I'm really appreciative that you've done that call for investors to look at it and then looking at this from an investor perspective. Because when we look back to 2021, optimism then was for founders. It seemed easier to raise, and now your response, it means it was a clearly difficult time for investors who were not getting the kind of returns that they expected, even at such high valuations or such even founder optimism. People were really excited in 2021. So I like how you flip the coin to say now this is the time that things are actually better for investors. So it's more about getting the returns even from angel investing. So I'd like to ask another question. So what assumptions would you say are no longer relevant that were relevant maybe 2, 3 years ago, and now that investors, angels should not still carry from the last cycle?
Assumptions about what? About what
About
kind
the
of assumption?
landscape, about the
So,
founders, about the opportunities.
well, first of all, I mean, the optimism of the last 3, 4 years that you talked about, in terms of what has turned out, the expectations going in versus what's turned out, I think there's more caution uh, that this is not as easy as it may seem. You may do a good job of raising the money, making the pitch and getting the check, but actually translating, that into business that's growing. I mean, for example, you start with an assumption, you start with, uh, projected, growth rates and incomes and so on. There are very few businesses that have kind of returned what the project, what was the basis for the valuation and so on. Uh, so I think a lot of people have kind of been sobered, so to speak. A lot of the valuations, I mean, a lot of people who raised money 3 years ago, if they're going to raise money today, they cannot get that money at the valuation they did 3, 4 years ago because of what has happened between the intervening period in terms of performance. So I think people therefore be more cautious and they'll ask tougher questions and all that. So that's changed. Um, the excitement, following what I'll call some early successes, would have waned because there hasn't been the bandwagon effect that we expected. More of those things haven't happened, and that was because this has happened in the toughest. I would say some of the toughest 3, 4 years in Nigeria's economic history. So I think so. Some of those people ask tougher questions now, and then I don't think we'll get the same kind of valuations that we got 3, 4 years ago.
Thank you. So, in your experience, where is the risk most commonly misunderstood for angels? So, is it in the valuation? Is it in the business model, or even the exit timelines? Where is most of the misunderstanding or misalignment coming from?
Well, valuation clearly is one. Like I said earlier, there's been a mismatch between expectations that underpinned some of those valuations we saw 3, 4, 5 years ago and the reality today. I mean, that's changed. The other thing, of course, that has changed is the angels themselves. I think people are finding out, actually, most investors are finding out if the angels themselves haven't, I'm sorry, if the founders haven't found out. This is tougher than we always think it is.
True.
And I was saying the last 3 years is been even tougher. I mean, first of all, getting a business started in this kind of environment is tough anyway to begin with. But when you do that in an economy that is restructuring, with a lot of economic reforms going on, it becomes even tougher. So expectations with respect to how quickly we can do it, how quickly the money will be made, how quickly the business plans can translate would have changed as well. So people, I'm not sure that reflect necessarily on the founders themselves, other than on the environment. I think it's more the environment than the founders. The founders basically found themselves in a tougher environment than they were. And what would change therefore is that we are looking for founders now that can read the environment right and can adapt, and operate on that, conditions that are completely different from what I would call the golden assumption or great golden scenarios.
Thank you. So, one of the things that we're definitely in agreement about is that founder readiness is one of the ways to de risk these investments.
Yeah.
Um, what do you think angels can do within their own due diligence or even within their processes to de risk some of these investments? We see angels not just as capital allocators. A lot of the angels that are even in this network are operators, are people who are playing an active role in society. Are there other things that we could do to de-risk some of these investments?
Well, first of all, I think we're going to have to do a bit more due diligence. A lot of investing, speaking for myself, anyways, will tend to be based on the assessment of the person you are giving the money to. So we are not as rigorous, at least at the angel investing, in diligence in the business themselves, particularly the market. If it's a startup, for example, there are market assumptions. Is the market there? Is it as big as they think it is? The reading on the commission, is it as easy as they think it will be? Pricing the whole works. So I think people are going to be a bit more strategic, a bit more deliberate, a bit more analytical. And what that will translate to will be tougher questions, tougher negotiations, and not being able to get away. Basically not being able to get away with what I would call easy valuations. So valuations will become more sticky.
Okay. So, what does a good angel return realistically look like in 2026?
The thing about return, but particularly for angel investing, given the risky stage at which you enter and the long-term nature of the investment, it's difficult to come up with a number. For me, what you get is what you get, and what you get is a function of the quality of decision making at the point where you are making the investment decision with respect to the opportunity, as well as the founders and the ability of the founder to translate something. So, in terms of return, again, I can only speak for myself. And given the fact that we don't expect anything to happen in the first 5 years of this something. So, if we invest today, thinking about return now is like, who knows what's going to happen? Who knows that the business will even make it? Who knows, somebody else won't come with a better mousetrap in the meantime. So for me, returns happen when they happen. Now, obviously, you can't ask me what do you consider to be a good return? What would be the minimum you would expect? It also depends again on the nature of the business, the amount of money you put into it, uh, and the kind of say you have about how things pan out. So angel investor return is anything from 2, 3, 4, 5, 10, 20, 300. There's some home runs you hit, but those are few and far between. So for me, in angel investing, taking a 5-year horizon, and also it also depends on the exit as well. The thing that we haven't done very well in Nigeria is exit. There are very few angel investments where people have had the opportunity to take cash out and exit, either because the business has been sold to maybe a strategic investor or a bigger investor, and you don't want to continue, with that investment, and therefore they take out what you might call the angel, the smaller, investors who can take their money out. There are many opportunities. I've not seen many. I've personally not experienced many. A lot of the investment I have done, those that have succeeded, I'm still there 10 years after. We continue to do well. Someday we hope that, you know, when you get returns in terms of dividends sometimes, or you think that someday when the business is eventually sold or whatever, you're talking about returns in the 100 times, 200 times, 1,000 times, and so on, depending on how lucky, I don't know how successful the business has been. If you want to go in as a going in position, if you don't see a return of 10 times your money in 5 years or 7 years, it's probably not worth the risk.
So you've touched on something very important with the timeline because that's one of the questions I'm seeing. What is a realistic average? You've touched on that, and what is the
Yeah.
time? But a lot of people go into angel investing with a much shorter timeline than what you described. So is this one of the risks that we feel like a lot of newer angels are not considering?
Yeah, I think so for sure. If you're doing angel investing and you think you get your money back in any shape or form earlier than 5 years, I think you are being too optimistic. I would say I don't think returns less than 5 years will happen. For two reasons. Number one, it takes time for the business to gain traction, for it to be substantial. Where to become attractive, maybe a buyer or somebody wants to buy it. That is one. The second thing, of course, that we don't really have an active market for selling businesses. So, so even if the business is ready to be sold and so on, it might take another 2 years from when you decide that it's time to exit, from when the exit actually happens. So I would say patience is what's required. You've got to take a long-term view of the investment. For me personally, I would say from when you enter to when you exit in less than 10 years might be the way to think.
So this leads me to my next question.
Mhm.
There are very few exits in our market. Should we be looking at exits differently from from what we currently are doing now? What other creative ways can angel investors get their returns? Because exits, like you've mentioned, are few and far between in this market. So, is there another way for our peculiar situation?
Another way to get an exit. Well, yeah, there are other ways. I mean, it also depends on how strategic you are in the investment. If you have 1% of a business, you're kind of logged in anyway, unless there's a bigger transaction you know by you. Sorry, can you hear me?
Yes, we can hear you now. You're back.
Sorry. So I mean, so it's, like I said, it depends on your stake, whether it's substantial enough to be of interest to anybody, and if you're a small player, you're trapped, so to speak. Unless and until something happens that is big, there's nothing you can do. The best you can do is to find somebody who is still interested in the business and wants to take you out. You know, you might be lucky, but then there has to be a transaction that sets the price. Otherwise, it's just going to be a bilateral conversation between you, maybe an existing investor who wants to maybe increase their stake in the business.
So
Other
that
than that, um, unless and until the business grows to the point where it becomes attractive to, say, a strategic investor or another financial investor, or you can flip it from angel to a venture, capital investor and so on. There isn't much you can do in that respect. There are very few founders that will have the means to take you out if you're a small shareholder. So what I would say is that as far as the angel investing environment is concerned in Nigeria, that's one area that is not completely clear. And it's not only an angel investing issue. The same issue with venture capital investment, the same issue with PE investments. I mean, exit is the toughest part of the whole cycle.
you touch on something now that there are very few founders who would be able to take out an angel shareholder. So, would you
Mhm.
say there's some power dynamics that come to play in this angel investing space? And then, how should angels who are looking to truly support the businesses and their bottom line be looking at this relationship? How do we have a balance there?
Which is why, again, my advice always is two things. Number one, take a long term view. You've got to be on that journey for a long time, and be careful also with who you invest. It has to be somebody that will stay the course, somebody that you want to be in his or her orbit, and the person is running a business that you like to be associated with for a long time, because it's a long term proposition. I mean, that's all I can say. It's not it's not a quick way to make money. That's the honest truth. I mean, I know we have a tendency to want to make a quick buck, in Nigeria, but that's the orientation. Orientation generally is short term. Angel investing is anything but short term. And so my advice basically is, if you can't stay in there for the long haul, don't bother. You know, and if you're going to be a small player, where you have a small stake, 1%, under 1%, and so on, you are trapped. Yeah, unless and until something happens, there's nothing much you can do other than that. So, which is another way of saying, if you can write a big check, I mean, okay, let's put it this way: the bigger the check you write, the more control you have over what happens with exits, the exit process in terms of the timing and so on.
Ah, so that's
Yeah.
another interesting question. We're talking
Mhm.
about the power dynamic. So how do you balance out this patience with the discipline when it comes to dealing with the founders? There's a lot of talk around governance now, but how do you enforce that even as an angel investor?
Well, which is why one of the most important things you can do when you're making investment is, who am I investing with? Okay. The discipline of the team, the cohesiveness of the team, and the team, I mean, is a team amenable to control. The kind of control, investors exercise over investment, in which they don't have day-to-day management participation, is oftentimes through either advisory board or corporate boards. Those are the kind of things you need to do. Of course, also depends, of course, on the strength of the kind of agreement you have. Do you have a shareholders agreement that defines the role, of board vis-a-vis management? Do the management have, employment contract that defines their roles and responsibilities, both to the company as well as to the investors? Those are the kind of things you look at. But knowing that you're on a long journey, you've got to make sure, therefore, that you're dealing with people who will not become different people than the people that you invested with. Because when they're asking for the money, the kind of person you are dealing with may be totally different from the person you have to be dealing with 5 years down the road, particularly if the company has done well or if the company has done very badly. Sometimes if the country hasn't done very well, or you get somebody who just goes cold, becomes inaccessible, unreachable, and so on. And if the company has done well, you could be dealing with somebody who just see you as an irritant more than anything else. So making sure that the company is going to be well governed. There's a board. Again, whether you can participate in that board is also sometimes also a function of how much stake you have in it, at least the quality of people on the board, and making sure that the board is not comprised of people that are related to, or overly friendly with the founders and so on. Those are the kind of things you can do to make sure you have a manageable situation in your hands.
Okay, so I have a question that will help mostly the new angels. So you talked about the shareholders agreement. So what are some
Mhm.
of the red flags with an angel investing contract that you'd say a new angel should look out for? What are the terms that will protect an angel that's coming into business to this sort of investing for the first time, just to protect their own investment and themselves at the end of the day?
First of all, is what I would call the power equation between the founders and the shareholders. Now, if you have a situation where the founders have a significant stake, maybe between them, let's say there are two or three founders, and between them they have 60% of the business, the dynamic is completely different from a situation where the founders own 10% or 20% of the business, and the rest is belongs to a wide range of shareholders. So the things to look for, therefore, will be, what are your rights, what are you entitled to, what are the minority, if you're a minority shareholder, what are the minority, protection? And then what is the dynamic between the founders and the larger shareholders? Because the larger shareholder will typically insist on certain things that cannot be done without their sign off or agreement. Certain things that cannot be done without board approval, and so on. And so those are the kinds of things you look for. You look for protections against, transfer of shares. How can the shares be transferred? Typically, in a startup or in private companies, you cannot just sell your shares to anybody. So any restrictions on the sale of shares, transfer of shares, are some of the things you need to look out for. Um, the incentive, I mean, the other thing you need to look out for will be the relationship between the founders as a management group and the company, which means, therefore, if one of the founders is going to be the CEO, do they have employment contracts that sets out the limits, I mean, that defines their responsibility and the limits of the rights and employee that they have, so that you don't have a situation where the founders basically use the company to live their life. I mean, so you should have a founder, therefore, that's on a salary, defined benefits, and so on. And even if the company is not in a position to pay those salaries because of cash flows, constraints, and so on, how that should be treated? How much of that should be just payable? How much of that can be converted to future equity? Those are the kind of things you look out for, basically to protect you. So you're dealing with a business that's going to be well structured, well organized, well governed, and where there is protection for all shareholders. Shareholder rights are completely, are adequately defined, and specific provisions for minority shareholder protection.
Thank you. So, in your previous response, you described two separate ends in terms of dealing with the founder. One, when you're dealing with a founder who has maybe the business has gone bust. And then you have another scenario that you described of when the business is actually doing well and you're dealing with egos or different sorts of behavior. So, what would you say, in your experience, are some signals that can at least help you distinguish between a fundable, long term founder that you can deal with or someone who is a great storyteller?
Hmm, that's tough. Um, that's tough. I mean, I guess experience will teach you how to rate people, and so it's the same thing as when you hire somebody, whether the person will do well down the line or would, and so. But clearly, the things you look out for me, is the background to the person. What is the person's background, family background? You know, if you're a religious person, what kind of religious values and so on the person has. You're looking for somebody who has what I would call a humility streak. Whether you think the person is humble, whether the person is teachable. Um, you can look at the dynamics between the members of the team. For example, if it's a team of 3 or 4 people and one of them is a principal founder and so on, how the dynamics between the team members, those are the things that will give you pointers as to the kind of person he will be. And it's something you watch from the very beginning. So reference checks is very important, which is why for me, I feel more comfortable investing in somebody who has a track record of some sort, whether in employment or in a previous business where you can ask people who know him in the business, something, what kind of person is he, so on. And yeah, I mean, in fact, it goes as far as if the young person knowing the parents, knowing the kind of family he or she comes from,
I was
whether
about
it's
to
the kind
get
of,
there.
so there
What's
has to be somebody.
I
I
was
mean,
about
is
to
there
ask you, what's the
it,
most unique due diligence approach that you've taken with the founder?
what is the what?
The
What is the
most unique
most?
due diligence process, like you just mentioned, meeting the parents. So, what would you
Yeah.
say is out of the box way that you've gone on to try to learn about a founder?
Like what you do, for example, you see the thing about the parents or some big uncle and so on is that if something goes wrong, is there anybody that you can report him to, that can talk to him? Is there somebody he respects that he will listen to if you can't reach him, for example, if he's no longer listening to you, or he gets too big for for his breeches and so on, for his or her breeches and so on. Those are the kind of things you look for, and most of the times, therefore, most of the founders that come to me are people that recommended by somebody. So there's almost like a guarantor, so to speak, something that will guarantee the person's good behavior. Uh, so not just some random person from nowhere that you don't know. You don't. I mean, of course we do that as well, but you're taking a risk. I mean, look, the whole angel investing is a very very risky business when it comes right down to it. Anyway, so it's almost like gambling. You may be right, you may be wrong. No,
So
seriously,
someone who's
seriously, because there's no art to it. I mean, now the thing about it is all about experience. If you've had a lifetime where you hire people, you train people up, and you watch people grow, you watch people change, and so on, you can read some of these signs. I mean, I mean, at least my own luck, basically from my own previous career, is that I've hired people from age 23, and they work with me until they turn 30, 40, and so on. So from experience of having dealt with many people, you can tell how people will turn out later based on what you see today. But it's still very, very judgmental. Very, very judgmental. There's no science to it. But it's central to the point we're talking about because of the risky nature of the business. We're talking about the long-term nature of the business and the fact that people do change. We grow and we change. And not only and we are changed by circumstances that you may not be able to foretell at the time you're making an investment. So it's a case of how will people handle adversity? How will they handle early or fast success? How would they handle challenge with money, not enough money? How would they handle when the money is coming too easily? What is their lifestyle? Do they live above their means, or are there people who want to do the things? I mean, if a 25-year-old that wants to do the same thing a 35-year-old is doing, those are the kind of things. Those are the kind of signs to look out for. I mean, I can give you some examples. Somebody came to me the other day, many years ago, came to pitch his business to me. And at least he had a very good business proposition and so on. And then as he was driving off, I just looked through my window and this guy drove off in a brand new Range Rover. And I asked myself, really? Here's somebody coming to look for money and he's driving a car that is aspirational to the most of the people that he's going to get money from. I didn't feel comfortable. So I called him. He just gave me all kinds of stories about, oh, it's not my car, it's my car, it's my uncle's car. Long story short. But those are the kind of cues you look out for. They tell you time, sense as to the kind of person you are going to be dealing with. Like I said, there's no science to it.
So that brings me to something that you mentioned about the other end. So how do you deal with a founder with hubris, someone who has made it, but now maybe you have less influence as the business has become more successful, even as an early angel?
Something. I mean, it's unfortunate, it's hard to say, but there's very much you can do. If you don't have a role, if you're on the board, maybe you still have a voice. If you're not on the board, and you have somebody on the board that can maybe represent your interests or pass messages. That's all you can do really. There isn't very much. That's the thing about the nature of investing. But once you give the money to the person and you got your share certificate and so on, unless there's some criminal activity going on, really, there isn't very much you can do. Especially if you're a small shareholder. If you're a significant shareholder, maybe you can arrange to meet with other significant shareholders and maybe form a club of people where you can exert influence, on the management. You Again, which underscores the need for making sure you are investing the right set of people. You know,
You
very, very
have
important.
mentioned twice now, well, more than twice now, about being a significant shareholder. What would you say is a sweet spot for an angel to be in? Because you've talked about the disadvantages of having too few shares or a very minority stake in a business where your check is small. And then you've talked about being able to influence the company with a bigger check. So, where would you say is a balance for a new angel, someone coming in? How would they balance that? Most people want to, I don't want to say like the initial time, spray and pray, distribute small amounts to leverage for risk. But how would you say is a more ideal approach to manage this? You want your check to be significant enough that you have a voice, but at the same time, you're weighing the risk with a new business. So, how would you balance that?
What do I mean? Depend on who you are. Depend on how rich you are. How much money. I mean, of course, how diverse your portfolio is, and so on. But again, going in position basically for me as an angel starting out is don't make too large an investment in any one entity. That's one. Secondly, don't invest money you cannot afford to lose. And thirdly, you take a long-term view of what you're doing. And fourthly, of course, is diversification, which is another way of saying, place small bets with many companies. Now, what that does is that if you place small bets, you don't have any influence. Just you're on a wing and a prayer. But if you invest across a wide spectrum of opportunities and so on, chances are whether you are there or not, those that will do well. And you might be lucky to get your money back from one or two out of say 10 or so. So we always talk about take a 10-year view, and over a 10-year period, try and have a portfolio of at least 20 investments. Chances are, if you do your due diligence and you're kind of a bit scientific about your choice making, decision making, of the 20, two, three will do well. And the three of them will probably return all the money you put in 20. And so, I mean, the vast majority of them will fail. You won't get your money back. I mean, it's all part of the risk, you're taking. You need to understand the risk you're taking, and that's it. Now, when you become more experienced, or you have more money to burn and all that kind of thing, then you can begin to place more bets where you can take 10% stake, you can take 20% stake, and so on. There's no magic to it. My own personal rule is that I don't want to own more than the founders. The founders must have far more skin in the game than me, and therefore I tend to cap my investment at 20%. I mean, there have been one or two occasions where I've gone more than 20% because that was because I got in at the very beginning, and let's just say the money wasn't complete. I had to put more money in it than I initially wanted to. But typically, 5-10% is comfortable. If you want to be a passive investor, if you want to be active, then maybe 10 to 20% will be more active. When we say active, we're not talking about you sit on the board, some kind of advisory board, some kind of coaching and mentoring and so on relationship with the founders where you're not managing the business, but you have a lot of influence with them.
Thank you. So you've answered one of the questions that we had in the comments about portfolio construction, but I would like to ask you personally, do you have a thematic approach towards your investments? Are there particular sectors that you, as one of our foremost angels, is more keen on? I'm not saying this to point other people in that direction, but just what's your approach to investing across sectors?
Well, first of all, I'm kind of sector agnostic. My focus is on the opportunity that's presented before me and my reading of the opportunity in terms of the markets, the size of the market, its growth potential, and so on. That's one on the one hand. And then on the other hand, who is this person that's bringing this opportunity to me? Does he or she know what they're talking about? Does they have a track record? Do they have? Do I believe they can translate? The idea and so on. And then number three, of course, can they be helped? Would they be teachable? You know, and so on. So kind of sector agnostic. But the things I have done have tended to be either technology or tech-enabled businesses. But that's not to say I didn't choose those sectors. I think those sectors just happen to be the busiest opportunities that became available at the time I started this journey of angel investing.
Thank you. So we've talked about governance a bit with some of the responses that you've given. So at the angel stage, would you say that you prefer a formalized board versus an advisory board for the businesses that you would be looking to invest in?
Or I would say the more structured, the better. I mean, some of the things I remember when I started out, you must have a board, and of course, because of the kind of person I was and the kind of people I interacted with, they always wanted me to be on the board. So I'll have a board, and somebody will have a say in the composition of the board, which we want to put a professional board there, board that will add value, you know, not not the board that will be answerable to the founder, but that the founders will be answerable to and respect. So I mean that's what we did. So I would rather the more formal the better. That's one. The second thing I insisted on, which I still insist on today, is that they must have good advisors, particularly audit. I always insist that okay, again, depending on the size of the investment, you must have is to make sure you get started on the right foot. Just set the right tone, the right ways of doing things, and set up determine from the very beginning that you're going to run a professionally managed business, where you respect the dichotomy between ownership and management, and you respect non-participating investors, and everybody's interests are aligned. So the simple answer is I would rather a a proper board than an advisory board. Now, if it's a startup as from they're still getting their hands around what the business is going to be all about, and they haven't quite tested the market or so on, you must start with an advisory board. But even the quality of people on that advisory board have to inspire confidence. That's to say, if you say the advisory board, they have to be able to actually offer quality advice, and we also have to determine that the people that will listen, the founder will listen to this advice or take advice from the body put together.
So, just on that point, have you experienced a business with a formalized board with maybe individuals already instituted that you were uncomfortable with to go ahead with your investment just due to the board composition?
No, I haven't. I mean, I guess again, my own particular situation, I get involved early enough. Uh, I'm sufficiently influential, either in terms of my relationship with the founders or in relation to maybe the amount of money I put into the business, that I have normally have a say in the commission of the board. But I've not really been in a situation where I've been in a board where one of the directors is not my kind of person.
Okay, so now we have some other questions I just want to take. This is taking us back to the market. You've mentioned already, you've alluded to the fact that doing business in our climate is quite tough. We cannot shy away from the ecosystem realities here in Nigeria. But so someone is asking a question that is almost about 2027. Do you think that the general elections will slow down investment activities? That this typically occurs a year before election. So, what is your take on that? I want to stress that that's an opinion or a perspective, just so no
Sure.
one thinks it as no.
Of course, since I don't have a crystal ball, whatever I say, can
Yes,
go
I had.
either way. Yeah.
Yeah.
Um, First of all, what I'm hearing, I'm not sure whether it's official yet, is that the election is going to happen earlier this year than in previous cycles. The whole idea is that the election will happen around about November to allow 6 months for litigation and tribunals and so on, so that whoever wins can be sworn in unencumbered come May 29 the following year. So if that is the case, this is going to be a year, it's going to be a busy year, let's put it that way. What are my expectations? My expectations is that it's probably not going to be as bad as people think. Uh, because I'm Nigerian, I see it from a completely different perspective from the way most foreigners see it. Most people say, "Oh, the election year is a year to stay away. Nothing happens in the country. Blah blah blah. There might be violence." I don't think. First of all, I don't think there'll be violence. I don't think. I think it's going to be a year as normal. Um, of course, election in Nigeria is always interesting. Everybody is an expert. Everybody wants to be the president. but there's only one candidate. Everybody wants to be governor. There's going to be one governor per state. So there'll be contests. And it's going to be very, very interesting. There'll be a lot of noise. Um, the usual, heating up of the politics Nigerians will say. You have to be in a position where you can separate the theatrics from the substance. I mean, that's who we are. Elections are never straightforward. Nobody ever wins a straight election. Nobody ever loses an election. He's always cheated, and so that will happen. Now, there tends to be a correlation between electioneering and inflation, because there are a lot of money being pumped into the system to finance the election, which in some respects is good for the economy because that money is being pumped to the market. Demand is generated for goods and services, so there's more activity. So depend of course on the sector you play in and all that kind of thing. So uh, again, based on my own reading of, I would say the political landscape, I would say it will be interesting, but I don't think it will be contentious. It will be contentious. It will be as contentious as the last election. And
So
therefore,
I
from
want
a
to
business point
connect.
of view, therefore, I will not hold back on anything.
Okay.
Yeah, from an investing, of course, depending on the nature of the business you are in, and so on, whether the capital intensity, whether you're in a building phase or whether you're building a plant or whatever. But I wouldn't hold up on anything. I just make sure I have my ears to the ground. I know what's going on. I don't get caught by surprise and so on. Because we're Nigerians, we know what's going on anyway. If we're not Nigerian, I would just my advice would have been stay close to a Nigerian. Make sure you have a Nigerian handholder who understands what's going on and can navigate you through the system.
So that's where the Lagos Angel Network comes in. But I still
Absolutely.
want to consult your crystal ball. So, what
Okay.
sectors or business models are you looking at this year, 2026? What sectors are you excited about?
No, you asked me that question before. I told you I'm sector agnostic, really.
I
You
know,
asked
but
me.
this is
Now,
a
now,
crystal ball
and,
prediction.
and the view I always have about this country is that there is nothing in this country where you don't find opportunities. There's no sector. I don't believe there are many sectors where you can say is overcrowded, you know, or that there's more supply than demand. There are not very many. Even when it's overcrowded, you find that a lot of the people that constitute the crowd are just noisemakers and people who are. I mean, so which means a lot of even the so-called crowded spaces can still be consolidated. A big player can come and completely redefine that space. Because the overcrowded tend to be small players and so on. A lot of them are more trading than substance and so on. Sector, um, again, there are some sectors that I believe you can't go wrong in. Food processing in Nigeria. I don't think you can go wrong. Some processing for exports. I don't think you can go wrong. Um, and of course, uh, value add. Yeah, I think we're getting away from a situation where we're exporting raw cocoa or raw ginger and raw those. So process some of those things, adding local value add both for the Nigerian market as well as for export. For me, it's a lot of opportunities there. Um, I mean, there are other opportunities, of course, that are very capital intensive. We are talking about angel investing now. What I have said, transportation is huge. Uh, Public transport is a big opportunity if you have a lot of money and so on. Whereas
I was going to ask you what you think about innovating around elections, sir. I don't think that we do.
what
I don't think that we do enough around civil tech.
what
So civil tech rather. So things around um, capturing data around elections and electioneering, considering that it's something that we do every 4 years. Is there a business case around Nigeria's electioneering?
aspects of it. I mean, like for example, I can give you one example. Every year we issue voters cards. Those voters cards are still imported sometimes, and they are imported not because there's no Nigerian that can do it, but because public procurement practices, they would rather bring them from China or whatever where they can play their games rather than give it to Nigerians. But again, with hopefully the government's Nigeria first policy, if they're sincere about implementing it, there are a lot of things that would not be sourced locally that were previously not sourced locally. Ballot boxes, ballot paper, voters cards, all of that can be done locally. And I think a lot of the others are already being done locally, capturing data, updating your voter register, all of that's already done uh, locally. And I think again, there was a particular technology they talked about the last time which they didn't use. There was a lot of electronic transmission of results and so on.
BVAS?
What do you call it?
BVAS?
Be vast. And so I think again, I like to believe that this year's election or next year's election, depending on timing, will adopt some more of the technology. Look, long story short is that the technology is going to play an increasingly large part in Nigeria election going forward, which means therefore progressively, it may not be this election, may not be this cycle, progressively the room for manipulation and rigging is going to be reduced over time. A lot of that is going to be made possible by technology. Hopefully, to be technology that is developed by Nigerians, being managed by Nigerians, using materials that are manufactured and supplied by Nigerians. So clearly, there's a business case to be made for election, and people do make money with elections. It's just a case of the procurement practice. How do they do it? Is it competitive processes, bidding processes, or is it man no man? However they do it, as long as it's done in Nigeria by Nigerians, it stays in the economy.
When you said man no man, what came to my head is man no DS. Like me, I know DS. Man no DS.
Yeah,
So,
several DS will do it the straight and narrow way. That's the problem.
I
Great,
have a
great.
question.
Before
Do
you
you
go on with the question,
think
Amanda, would like to acknowledge everyone who's joined us from the studio here. We could see that there are 55 people actively watching us right now, but I know that that number is probably around 100 or 200 for people jumping in and out of the call, and we're grateful to everyone who's joined us on the Lagos Angel Network community group. The comments and questions have already been coming in. I would also like to specially acknowledge the active presence and participation of, I was going to say DS, but DS is here already, of TD, whose brother is here. So is they good?
Oh, okay. So TD
Yeah,
is
no,
in
TD has been
wherever he is. Okay,
yeah,
that's
Chidi has
interesting.
been policing you and dropping it, and we're grateful. Dotun Suleiman and Tommy Davis are the co-founders of this great organization, and I'm grateful for the opportunity to be able to carry on the work that they started over a decade ago. We have a question from the community here. Amanda, over to you.
the last, well, not the last question, but how should investors realistically measure returns purely by exit multiples, or should interim value creation, dividends, buybacks, secondary sales also matter in emerging markets like Africa?
I would say uh, if for the business are doing well, uh, you know, dividends, are very important. This is a dividend leaning environment. When you don't have a market where you can trade your stock easily, then anything you can get out of it in terms of dividends or payout or whatever is welcome. I mean, and therefore I would encourage businesses or whatever, the moment you are in a position to give dividends to your shareholders, do so, no matter how small. What it does basically validates the investment and boosts confidence and also boosts support. Because chances are, if the business is doing well, particularly if you do what you're doing where you can pay some initial dividends and so on, and you need money to scale, you are more likely to get better response from your investors, if they've gotten something back from their initial investment. So I would say dividend for sure, yes. I think what we need to do, I don't know how we're going to do that. We need to create a secondary market for people who need to exit these investments before they mature, before an exit, a formal exit process happens. There has to be a formal
Well,
market. Maybe that's something Lagos Agent Network would like to set up, create a market for people who want to exit before time, either because they get tired or they have specific needs, and they have maybe 1% of AYZ or 2% of XYZ. Put on the market. Let's there be some kind of exchange where those kind of shareholding can be traded. That would create a bit more dynamism again to the whole angel investing ecosystem. People can go in and out without a major liquidity event happening.
great. When you spoke about the Lagos Angel Network providing such exit opportunities, I'm reminded of one that you championed recently. So you're not just talking the talk, but you do the things that you're saying. So there
Sure.
was there was an exit for an organization recently because DS bought over their shares in that company. So it was an exit for them and something that was part of the exits that we recorded this year. And we're
Sure.
grateful for your consistent championing of the growth of angel investing in the country. Thank you so much, sir.
You're
Um,
welcome.
Amanda, we do still have them. Now they are coming in all over the place. And well, it's time for those. So Clinton Finance says, how can one reach out to the angels? And what's the average check that they cut early stage founders that have validated demand? No, this is not a question for DS. I will come back to take that. Amanda, you had one question that I stopped you on. Forgive me.
Yeah. So it was one of the sectors that DS expressed optimism about, which is food processing. So we all love that sector, but they are most affected by what founders call ecosystems tax because of our infrastructure challenges in Nigeria. So what would you say to people in that sector? How can angels be more, let's say, supportive of that sector? I think it has great value for our economic growth in Nigeria, but what are the other ways that angels can nurture these sort of businesses?
I mean, for me, first of all, the opportunity is there, I think we all rightly acknowledge. I think it's a scale sensitive business. You want to do it and do it well, you've got to do it at scale, which is another way of saying that it's not something. There are a lot of mom and pop people doing plantain chips and doing chin chin and doing peanuts and so on, which is fine. But from if somebody can put together a proposition to do it at scale, and you can demonstrate that you can do it because of either because you've done it on a smaller scale before, you now want to scale and other kind of stuff, and you can maybe you already have a market and you cannot satisfy the market, they're wanting more of what you're producing as well. I think it's an opportunity to scale. A lot of the things that we worried about, particularly with respect to such business, particularly when it comes to manufacturing, are getting resolved, not fully but resolved. I mean, for example, currency fluctuation is not an issue anymore. I mean, so even so, you can raise FX if it's an FX dependent something you need to buy machine and so on. There's no risk that you know you can borrow dollars, and you'll be able to pay dollars, provided of course the business will earn some dollars and other kind of thing. Um, Commodity prices, there's a lot more transparency about those input prices right now. Um, Inflation, of course, is being moderated. We hope that will continue. So the environment is becoming more suitable for those large scale, long term investments and so on. I do like something we should actively promote. Not everybody doing their own small thing in their kitchen or in their backyard.
Yes, what would you say to the several Lagos Angel Network members who are in the diaspora, who are not in Nigeria often, but like what we're doing at LAN, they've joined the organization, but still have this feeling that, except for what Dr. King is saying, except that we see TD and we know DS, there's not so much clarity. And a lot of them also have the bias of, oh, Nigeria, can you really trust what's going on there? So you see them penny pinch in their approach to the investment. What's your take,
Mm.
sir, on this?
Well, I mean, I would say I would be sensitive to what they feel. What they feel is a lot of experience. Angel investing requires proximity. You've got to be near the business you are investing in. You've got to be near people you are invested with. You've got to have some closeness. Because of the nature of the business, is startup, the controls are not as strong as the controls surrounding businesses listed on the stock exchange and so on. Proximity is very important, which is why, for example, when people talk about angel investing and people are trying to pitch to me businesses in Kenya or South Africa, I say, sorry, I go there once or twice a year. That's not enough for me to monitor what's going on there. However, since we're talking about home, I guess I think they can invest comfortably in the home because they have family here in Nigeria that can look after their affairs for them. Take an interest again, also depends, of course, on the kind of size of checks they're willing to or able to write. If you write a small check, again, uh, I will encourage them to do that. Just like I said, generally for angel investing, write small checks across sectors, across geography and so on, and make too many of them. Maybe do 10, do 20, and just wait and make sure something will happen because there are just too many things happening in the environment. There's too many opportunities here that not all of them will fail. A few of them will succeed and succeed big. And if you hedge your bet and place any small bet, chances are you bet on a winner sooner or later. Now, if you want to make a significant investment and you're abroad, what I would suggest you do is make sure there's somebody that can help you look after your affairs that you trust. You know, and ideally, the person should be invested in the same business you are investing in. Is another way of saying, if somebody you trust is investing in a business and he tells you about it, you can say, okay, fine. If you're going to, monitor it, manage it for not just for yourself but for me, I'll put money in it and so on. Those are the kind of things we can do. So I would encourage them to invest in their country because this is where the opportunities are. The kind of return they will get here will beat anything they can get in the UK or in the US.
Great. So the questions are pouring in. We still graciously still do have a few more minutes. Um, Franklin Amao is asking, sir. It says, "What milestones do you encourage investee companies to develop?" No, no. So what milestones does he encourage investee companies to develop more sophisticated management infrastructure? I think this is something you had mentioned earlier. But are there milestones that you can see and check out for when talking around governance? Are there governance milestones that is?
Governance milestone will be things like, you know, um, first of all, setting up your board, when your first audited accounts, for example, will be a key milestone. Your first AGM,
I think okay, he's back. We can't hear you, sir. Something about the sound. No, we can't, sir. Okay, you probably need to log out and log back in. We can't hear you, dear sir. Log out. So you see where your name is up there. Log out and log back in, sir. Log out and log back in. All right. Whilst we wait for DS to come through, information about the Lagos Angel Network can be found on the website www.lagosangelnetwork.net, and on the site you would find the place where it says founders. Under founders you click in there and then you get a form that allows you put in your details. Yet again, you can just do is Joseph, please put that on the screen. Founders at lagosangels.net. Send your decks that way, and the venture team will share. The venture team would look through your decks and, if possible, give you access to the angels. But the land angels are always looking out for deals every other time. So we encourage that founders do send us their decks and one pagers or whatever it is that you have that you want people to see. Send your decks to that address there. Founders at Lagos Angel Network. Yes,
Yeah.
sir, you are.
So we're talking about milestones, right? We're talking about milestones.
Yes.
Yeah. So I was talking about the milestones, talking about governance milestone is setting up the board, having your first board meeting, having your first AGM, having your issuing your first audited account. Those are significant milestones in the startup, in the history of a startup. And of course, operationally will be, you know, your first million, your first billion, your first, those will be significant milestones. And then, of course, when you get cash flow positive, another milestone, a beta positive, another milestone. When you make your first profit, significant milestone. When you pay your first dividend, that'll be a milestone. I mean, there's many milestones you can set for yourself. You know.
Great. When you said first million and first billion, the word that came to my head was the word unicorn. So, on a joking, personal, playful note, how many unicorns are in your portfolio, Daddy? Number one. Number
It depends on
two.
how you define unicorn. I mean,
eh,
because
yes, hold on, sir. Hold on, sir.
I
So that
don't
you can
believe, for
put it
example, that $1 billion for Nigeria doesn't make any sense.
together. Okay. No, so I was going to say that, which was my next question added to the first one. So,
Mhm.
I know lots of people come to the Lagos Angel Network because they want to invest in the next unicorn.
Mhm.
So, what's your take on that unicorn conversation? Totally, because people are saying, "Oh, I want to join land for the next big thing, so I can be in the next big thing." I know TD will come and answer me now, so I'm waiting for his comment on this matter.
Well, the thing
Please.
about it is that you can't tell, and until you put your toe in the water, you can't tell. Which is another way of saying you've got to place a bet. And because you can't tell, you cannot say that is going to be a unicorn. You
Mm,
can't. And therefore just place many bets. That's all I can advise. Just place many bets. One of them could be a unicorn. No promises, no guarantees, but it could happen. And those who I can assure you, those who invested became unicorn probably didn't know from day one that those were unicorn. You know. So
so
if there was a formula for determining what's going to be a unicorn, can you imagine what the valuation will be ab initio? Of course, exactly. So
Amanda, you brought me here to do your work. I'm shutting up back.
No, so that's fine. We've answered most of the questions that have come in. So I just wanted Solomon to actually talk about the Lagos Angel Network in more detail. That's how we want to wrap up the conversation.
Mm,
Just to introduce new angels, people who are curious about angel investing to the network, and then we could take the conversation on from there. So that's what his segment was meant to be. But I just want to thank you, DS, for taking time to answer some of these questions or even sharing some of your thoughts and perspectives, even about the economic climate and the political climate. A lot of people
mhm.
shy from these conversations, but you were able to have them with us on the call. So very grateful for that. Yes, and then the Angels Network, Solomon, you can continue for just how more people can get involved.
great. Thank you so much. Before I go into that, so I told you Diaz was going to answer this unicorn matter. He has come.
Okay.
Okay.
So, uh,
Okay.
it,
So
it
what's
says
the, what's the what? Huh?
we can tell which one we fail, but telling which one will go all the way to unicorn is the stuff of which dreams are made of. Exactly what DS had said earlier. You truly
Sure.
can't tell. And that's the reason why we usually would invite people to join the network.
Mhm.
Come and be a part of a community of people having these conversations around angel investing. There's made a lot of um, deep comments around investing with other people. If somebody else is on the deal, that is on ground, that is able to help you supervise the deal, supervise the business, provide the governance, which is one of the key things that we do at the Lagos Angel Network. For every deal that is done, we don't leave the founders alone. There's usually one or two, at the very least, experienced angels who have sector understanding of those businesses, going into those businesses as advisors, as mentors, and they touch base with them regularly. And therefore, you're able to have a representative who is also invested in that business there, ensuring that governance is going well, auditing, accounting, sales, marketing strategy, and compliance. All that is ensured by the angel most times who go in there, and they are the ones who also come back with the reports. So we get reports on both layers. We get reports from the founders themselves, but we also do get reports, unbiased reports from the angel investors who are in these deals. So it is important that you don't do angel investing alone. I think that angel investing done in a community setup like the one provided by the Lagos Angel Network is the better approach to it. And so that's why globally you will see the rise of several angel groups. Back in the day, 10 years ago, you didn't have this much of angel groups in Africa, as that today there are over 77 angel groups as provided under the leadership of the African Business Angel Network. Last year, interestingly, our dear DS was awarded Angel Investor of the Year by ABAN, and I was very glad because hey, it came home to us. But so you want to be in a community as an angel investor with other people who are actively angel investing. And at land, the deals come through regularly. On an average quarter, there's usually 2 to 4 deals being done, properly vetted. Land has now an investment committee. So beyond you choosing by yourself, there are also a lot of other people. And that's one of the beautiful things about Lagos Angel Network. Several people have several ideas, several perspectives. So I probably come from a younger person's perspective. DS brings an older person's perspective. Amanda brings the gender lens to the conversation. So the diversity of perspectives helps you to make better investing decisions. So if you're thinking about, oh, should I is land worth it? It's worth it totally. And we're always happy and glad to receive more people to become angel investors because the more angel investors there are, the more capital can be available to the businesses in the ecosystem. More businesses means more jobs, more families fed, less hunger, less poverty, less crime. So it's just dovetails totally. And so we encourage you to please join us. On the screen, you will find www.lagosangelnetwork/community. There's a simple form there. Amanda, interestingly, is on the membership team. So you're most likely going to engage with Amanda again as you get onboarded into the Lagos Angel Network. Um, Registration and vetting and all that is a pretty simple process. If you fill the form, we'll send you an email and we'll be in touch. It's something you can do that can happen even today if it's something you're looking at. Yes, would like to thank our sponsors for this event, Kate KO and Capital Advisors Management Company Limited. These two organizations have ensured that we have an each free event. We've also had necessary publicity pre-event and post-event. This is just that the money that they brought did not reach to pay DS because you can't pay DS what is what. But we also do have, interestingly, at the Lagos Angel Network, we do have private individual members and corporate organizations like KKO, like the CACMC, that are members of the Lagos Angel Network, so that individuals are angel investing and corporate organizations are also angel investing. Yes, so that's my take. But before we allow you go, sir, final
Mhm.
words for the community.
Well, like I always say, whenever I get these opportunities, that there's never a better time to invest. And I'm not being biased, and there's no a better place to invest than Nigeria. There are many things that inform that conclusion. Like I said earlier, the business environment is getting better and better and better. We have what I'll call a business friendly president. He understands business. And therefore, I think as long as he's there, and based on what he's done to date, it will just make the business environment easier, more predictable, more friendly to investing activity. So in terms of timing, therefore, is a good time to continue to invest. Now, in terms of the country, again, it's still a country that is work in progress. There's still so much to do, in this country, and it's Nigerians that are going to do it. And in the process of doing it, you're going to make a lot of money. You know, some businesses are, doing a lot of work, making a lot of money. The thing I can say, of course, is he's talking about uh, unicorns and so on. Unicorns are fine. They sound very nice, but there's a lot of work behind them. A lot of work and many forces at work and so on, and it takes time. I'm not aware of anybody where you can do a unicorn in 10 years. They must sound like they started yesterday. If you go and do the ground research, they've been at it
Mm,
for longer than before they hit the headlines. So, but the opportunities are there. The opportunities are there. There are still so many issues, so many challenges confronting us as a people and as a country, so many developmental challenges that we have to solve. We have to invest. And I think also, just as we need domestic capital, domestic investors, and so on, it's also a good time to collaborate with offshore capital. Uh, the, at least the perception of Nigeria in the investing community internationally is getting better and better and better every day. I mean, people criticize the president for traveling very often, but a lot of those travels are business related. I don't know whether you guys are aware of the deal he just signed with the UAE. It's just another one with Turkey. I
okay.
mean, Turkey just said they want to do $5 billion of business with Nigeria. That's going to be with Nigerians. So, create an opportunity for Nigerians who are doing business with Turkey or whatever, or who have Turkish partners to say, let's ride on that. Just join that bandwagon and move the business that we're doing with Turkey from less than $1 billion today to $5 billion. That's aspirational. That's an opportunity right there.
Mm,
I mean, we just signed one with UAE, some kind of a economic cooperation. So there are many such deals. So we'll just be on the lookout for opportunities and for us to do the things that will solve the problems of this country. Unemployment is a major issue, and the only way we're going to solve unemployment is create jobs.
great jobs, great
Create
businesses.
jobs. I know people will complain that they can't find skills and so on, but there are enough people in Nigeria. It might be hard to find the person you're looking for, but that person is there. So my encouragement, therefore, is this is the time and this is the place. And if we don't
Thank
do it,
you.
nobody's going to do it.
Absolutely, absolutely, absolutely. Thank you, dear sir. Amanda, last words.
So I like what DS said. Impact through entrepreneurship. An ethos I'm very familiar with, and that's what we're trying to achieve here by supporting the entrepreneurs and even people with angel investing. We're trying to make things better for Nigerians by creating these opportunities. So we hope you join us soon at Lagos Angel Network. I am Amanda Etuk, and this has been a fabulous time.
Thank you, Amanda. I'm Amanda Etuk, and this has been a
I,
fabulous.
I'm what do you call it, signing out from the conversation.
Yeah, great. Yes, yes.
Okay. Right. Thank
Joseph, we can get
you.
everything out of the system
It's
now.
been a pleasure. Yeah.
Thank you, sir.
And
Thank you
if
so much.
there's anything I can do, I'll continue to make myself available.
You know that I'm coming. You know that I'm
Of
coming.
course.
Thank you so much, sir. Thank you.
Yeah. You know,
All
yeah.
right,
Bye
to
bye.
all
Yeah.
our to all our participants on the call, you can take out DS. To all our participants on the call, thank you, everyone. Yeah, I can see the conversations are heating up in the group. Franklin, great to see you. Thank you, Julius Oscar. Thank you, TD. Thank you to our sponsors. Joseph, please, I'd like to acknowledge them again. Kate KO and Capital. Dr. Tunde, thank you so much. Capital Advisors and Management Company Limited, both organizations that have helped to make this event go well. Thank you so much. We're out of time, but we're grateful to everyone who's made this event possible. Those of you watching on YouTube who just watched and lounging and taking notes, fantastic. To the founders on the call and all the angels and intending angels, the Lagos Angel Network is home for all of you, and we're waiting to receive you and work with you. Till we'll come your way again sometime next month on another edition of the Lunch and Learn event. This is me signing out.